Welcome people. Today I will be highlighting the budget and new tax regime of India. Let us see what are the implications of this new tax regime. Well, the main focus of this new tax regime is to put money in the pockets of Indian middle class. Up to income of 12 lakh, most of the salaried people will be tax free. Updated file return can be filled up to 4 years of the assessment year. Threshold for TCS on overseas remittance has been raised to 10 lakh and there is no TCS on remittances for education loan. Well, if you are late, you have to pay additional tax for the return updated. You can invest in NPS Vatsalya and save up to 50,000 more. No basic custom duty on 36 life-saving drugs for cancer and other rare disease. For business people, there is 10-year tax holiday for a startup incorporated before April 2030. And also, only TDS on sales of goods at 0.1%. The choices between deduction are different in the old and new tax regime, as you should stick to old system only if you manage to save a major chunk of your paycheck. Crypto trading will be levied at 30% tax. Minor error will no longer lead to deregistration. With this new tax regime, 1/3 of current taxpayer will not be paying taxes. Budget has sought to bring down the number of transaction level for tax deducted at source. The new slab rates have made the new tax regime quite lucrative, without any exemption, deduction, and losses. However, if you are eligible to claim significant exemption and deduction, then the old tax regime may still be a better option. Individuals involved in cryptocurrency trading must report their income from BDAs in Schedule BDA in the applicable annual income tax return, which could be ITR 2 or 3. The schedule asks for details like date of acquisition, date of transfer, cost of acquisition, and consideration received. It is quite critical to disclose BDA income, as any underreporting or misreporting of income can lead to penalties. Additionally, there will be interest implication on unpaid tax. Here are 10 things that individual taxpayer should do. Under the new tax regime for financial year 2025-26, individual earning a taxable income of 25 lakh can save as much as 1,10,000 in taxes. Tax rebate has been enhanced from 25,000 to 60,000 rupees for those availing the new tax regime. It is not applicable for NRIs. Owners can continue to claim two houses as self-occupied whether they live in them or not without needing to meet any specific condition. The threshold for tax collected at source on overseas remittances under Liberalized Remittance Scheme (LRS) has been increased from 7 lakh to 10 lakh. Overseas travel for TCS will not apply to remittances made for educational expenses where such remittance is out of a loan taken from a specified financial institution. Earlier, the TCS on this was applicable at 0.5% on remittances over 7 lakh. Taxpayer can file updated tax return to rectify any omission or wrong statement made in their original tax return. The time limit to file the updated return has been increased from existing for 24 months to 48 months, but with the steep additional tax and interest aggregating to 70%. Tax deduction under the old tax regime for one contribution to National Pension Scheme of 50,000 has been extended to contribution made in the name of minor under NPS Vatsalya scheme. The limit for tax deduction on interest income for senior citizen has been increased from present limit of 50,000 to rupees 1 lakh. For other taxpayers, the limit has been enhanced to 50,000 from 40,000 for interest on deposit from banks, cooperative society, post offices, and 10,000 in other rent cases. Paid by non-individual entails a TDS obligation. The threshold limit for 2.4 lakh per annum for such TDS has been increased to 50,000 per month. There is an increase in the threshold limit of TDS on dividend income and income from mutual fund units from the existing threshold of 5,000 to 10,000. Here are the 9 things every consumer should know. Custom duties on jewelry have been reduced by 5%. Custom duties on bed and mattresses has been reduced by 2.5%. Custom duty on article imported in baggage is reduced to 35%. Custom duty on imported bikes have been reduced by 10%. Custom duty on imported furniture is then reduced from 25% to 20%. Custom duty on imported items for personal use is reduced by 18.5%. Custom duties or rate on luminary and lighting is reduced by 5%. Custom duty on solar modules is reduced by 4%. Imported flat display will be more costlier as custom duty has been increased from 10 to 20% on those.